Waymo, the autonomous driving company who's really leading the way in autonomous ride sharing, got a $5.6 billion investment that was announced today. So I want to dig through exactly who's investing in the company. This is a company that is technically a subsidiary of Alphabet, but it does have its own capital structure. So there are outside investors. This is technically a separate business. Eventually, it wouldn't be surprising to see this business be public, but we're definitely not quite there yet. In the meantime, Alphabet investors do get exposure to Waymo, and Alphabet is doubling down on the company. So let's dig through what we learned today. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's look at the announcement from Waymo. So you can see here that they announced that they have closed an oversubscribed investment round of $5.6 billion led by Alphabet, with continued participation by Andreessen Horowitz, Fidelity, Perry Creek, Silver Lake, Tiger Global, and T. Rowe Price. What are they going to do with this money? There's a few things that we know, at least for now. They're going to continue welcoming more riders into the Waymo One ride-hailing service in San Francisco, Phoenix, Los Angeles, Austin, and Atlanta. Those last two have partnerships with Uber, and they're going to continue advancing the Waymo Driver to what they say is support a variety of business applications over time. Couple of things here. First of all, I think the main use for this investment is going to be to scale the business. We know that Waymo has a 6th generation vehicle, which is right here. This is the one that's designed by Zeekr. Not really clear when this is going to actually make it to the US in any sort of scaled fashion, because Zeekr is going to be hit by those 100% tariffs for importing electric vehicles from China. So may not be cost effective to do that. In the meantime, Waymo did announce a partnership earlier in October with Hyundai, and that's to build basically the same technology on their Ioniq 5 SUVs. Basically, the Ioniq 5 SUV is going to come off the production line, and then Waymo is going to put their equipment right on. So not quite built in line, and it's definitely not a custom vehicle, but it's going to be kind of the next best thing to the way that they're custom designing their vehicles today. So definitely going to see more vehicles on the road. How many? If these vehicles are $100,000, you could potentially get 50 to 60,000 vehicles on the road, but that would use up all of those funds. But just to kind of put some scale to what $5.6 billion gets you for Waymo. But the other thing is the support a variety of business applications over time. That, I think, is going to be really important for these autonomous ride-sharing companies. They're going to be really busy in morning rush hour hours, afternoon rush hour, maybe a little bit less busy during the day or in evening hours. And then there's going to be a huge portion of the day, particularly at night, where there's going to be nothing for them to do if they're just taking ride sharing. So there's a bunch of different ways that you could make money on these vehicles being just driving around, doing all kinds of other things. You could be delivering food from restaurants. You could be delivering groceries. You could do overnight deliveries. Businesses are doing that all the time. There's tons of trucks driving around, going from one part of a city to another just to get parts or internal mail from one building to another. It sounds crazy, but it's actually a pretty big business. And those are the kind of ancillary services that Waymo is going to be able to provide if they have these custom built vehicles and if they have the capability to build these things out. Now, we've seen these things talked about before. Cruise had their Origin vehicle, which could be modified to have little cubbies in it, where you could actually have a cooled area for things like food delivery. So these are things that companies have been thinking about, but haven't really been put into place in many ways. So that's part of what this $5.6 billion is going to be used for. But I think just in general, scaling the business. We have 5 cities right now. Could that get to 10, maybe even 15 cities by the end of 2025? Get to 1,000, 2,000 vehicles in each city, maybe even more than that. That would ultimately start building the scale. And what you want to do if you're Waymo is build a network effect. You want there to be enough supply that when somebody needs a ride, they think about going to Waymo first instead of going to Uber. If you're the first to build this autonomous vehicle network effect and you have that customer information, that ends up being a really sticky business. You basically become Uber in the market instead of being Lyft. Lyft was second. Lyft was always smaller. That's why they have really fallen behind Uber. As more companies come into the autonomous vehicle space, we know that Tesla has its eyes on getting something on the road potentially in 2027 or 2028. Well, if Waymo has 100,000 or 1 million vehicles on the road performing autonomous ride shares before Tesla even launches a product, that could put them ahead, especially if they have a reasonably good cost structure. And that cost structure is really only going to get lower as they scale the business. So you see, all of these things have to happen. They need the money to actually scale the business and build out all of these capabilities from a hardware perspective. And I think that's really what Waymo is going to be focusing on over the next couple of years. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So as Waymo starts to scale, how do investors actually make money on this? Well, that's where things get a little bit difficult in the autonomous vehicle space. Waymo is, I think, clearly the leader in the market today, but they're part of Alphabet, or at least majority owned by Alphabet. Alphabet is a massive tech company, and a very, very small portion of their business is Waymo. So until Alphabet splits Waymo out, really the only exposure you're going to be able to get is through owning shares of Alphabet. So one of the reasons that I own shares, but it can't be the core part of your thesis because it's just a very, very, very small portion of Alphabet's business overall. So that's one thing to consider. The other way that you could potentially benefit from Waymo growing is through Uber. Now, it depends on how the autonomous ride-sharing industry plays out. Waymo could build its own app, could build its own network effect basically by customers going straight to the Waymo app. That's what they're doing in 3 cities. But the 2 that they're working on with Uber, where Uber is actually going to be running the Waymo fleet, that's going to be Uber bringing customers to Waymo. So Waymo is going to be a supplier of vehicles and autonomous vehicle technology. Uber is actually going to run the day-to-day and actually get customers into their vehicles. If that's the way things play out, and Uber is able to make deals like this with Waymo and Cruise and Zoox and all kinds of other companies who are trying to get into this market, Uber could be in a really, really good position. They could potentially 10x the size of their potential market just by owning the customer relationship for these autonomous vehicle fleets. So those are the 2 that are involved, at least in this deal. The other 2 that I just want to point out is Cruise basically has a very similar model to Waymo. They're not back on the roads yet, but they will be back on the road in 2025. That is going to be with a custom Chevy Bolt. So very possible that they will have a lower cost structure than Waymo does today because they're owned by General Motors. And General Motors is actually going to be building that technology in line. So there's a little bit more advantage from a vertical integration perspective. I don't think their technology is where Waymo's is, but we'll see when they actually get back on the road next year. They also have a partnership with Uber. So another way that Uber could potentially benefit. And the final one is Mobileye. Mobileye is the company that builds a lot of the technology that goes into vehicles today. So lane assist, smart cruise control, things like that typically come from Mobileye. They have technology that they're building for next generation vehicles for level 4 and level 5 autonomy. If those vehicles start coming out, and this wouldn't be for another probably 5 to 10 years, they could be the technology company behind all of these other companies building fully autonomous vehicles. Again, if Mobileye wins, you probably have Uber being a winner as well. So something I'll definitely be covering here on this channel, but let me know what you think about Waymo's $5.6 billion funding round. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.